Good evening. Am
Good
I
evening, sir.
audible? Good evening.
Yes, sir.
Any question, any query from our previous session? Anyone have any question, any query? Okay. So there is no question, no query. Uh, Yesterday we discussed about zero rated say supply, etc. And import of goods. We are discussing about place of supply. Import of goods. In case when we are importing some goods from outside India to India, then it is treated as interstate sale. It is considered as interstate sale. And on that transaction, apart from custom duty, you are liable for IGST, or in some cases, you may also liable for GST compensation cess. How it will work? Suppose you imported goods of rupees 1 lakh, and on that goods, suppose you are liable for custom duty of 10%, and that goods is you are also liable for IGST at the rate of 18% and GST compensation says at the rate of 28%. Then how shall we will calculate that one? This is the mechanism. First of all, this is the value for the custom valuation for levying custom duty. On this value, we are supposed to levy custom duty that is known as basic custom duty. Say it is given at the rate of 10%. So it is 10% of assessable value. We got 10,000 rupees. On whenever we charge custom duty, 10% of it is applicable as social welfare surcharge. Even though it is not mentioned in the illustration, this 10% SWS you are supposed to levy, you are supposed to charge, you are supposed to consider as 10% of your basic custom duty. So my SWS became 1,000. Altogether, my custom duty, basic custom duty is 10,000. Social welfare surcharge is always 10% of basic custom duty. So it would be 1,000 rupees. Now the total of this three figure comes to rupees 1,11,000. On this 1,11,000, we are supposed to calculate our IGST. IGST at the rate of 18%. Say it is given at the rate of 18%. So at this, we are supposed to calculate 18%, which comes to 19,980. And if GST compensation cess is also applicable, then on this 1,11,000, we are supposed to calculate 28%. Altogether, at the time of importation, we are supposed to pay duty as well as tax amounting to rupees 62,060. How it was calculated? 10,000 plus 1,000 plus 19,980 plus 31,080. Altogether, it comes to 60,060. Against that, on payment of this duty, against this 19,980, the SSE is eligible for ITC. Input tax credit would be available. Input tax credit would be available against this payment of IGST as well as for this cess. However, against this basic custom duty and social welfare surcharge, there is no ITC would be available. Is it clear? Further, if we are importing services, then custom duty are not coming to picture. Custom Act are applicable only in case we are importing goods, not applicable in case we are importing services. Import of services are totally governed by your IGST Act 2017. We already knows that thing. If we are importing service, even it is with consideration, but without any furtherance of business, it would be treated as supply. Even though it is for personal use, it will be treated as supply. We already discussed that point last night. And if it is import of service, is if it is without consideration, but it is for the purpose of business and it is from related person, then it would be treated as supply. If it is from other person, then it is not treated as supply. And if it is without consideration, And for personal use, it would be not considered as supply. These 2 points we already discussed in our last or previous session. That means if you are downloading some images and something from Google or Facebook, etc., do you think you are liable for custom GST? The answer is no. Google or Facebook are not our related person. Since I am not paying anything, even though I am importing services, but I am not paying anything, and for my personal use, I'm using those imported material, then no GST is applicable. If even though it is for my business purpose, since it is freely downloadable, then and they are not my related, hence this is GST is not applicable. However, if I pay some money against that importation, even though it is for business purpose or for personal purpose, it is treated as supply and accordingly we are liable for GST. Is it clear to all? Is it clear to all? Last night we
Yes,
already
sir.
discussed all this point. Is it clear?
Yes, sir.
Okay. What about Sandeep? Try to make the session interactive. Now comes to place of supply of goods. Last night we discussed about if goods board from CCU and we are traveling through air, what would be considered as place of supply. These are the rules for for determining place of supply of goods. First of all, we are discussing about how to determine place of supply in respect of goods, where the supply involves the movement of goods, whether by the supplier or by the recipient. In any circumstances, if due to that supply, goods are supposed to be moved, in that situation, the place of supply of such goods shall be the location of the goods at the time at which the movement of goods terminate. That means where it reach, that would be considered as place of supply. That means suppose a supplier located in Kolkata supplied goods to the recipient in Delhi. That means goods are moving due to that supply. Goods are moving from Kolkata to Delhi. That means goods are reaching, goods are destined to Delhi. That means the place of supply would be considered as Delhi. That means this transaction are between Kolkata and Delhi. That means it is considered as interested supply. On this transaction, we are supposed to levy IGST, where the goods are delivered by the supplier to a recipient or any other person on the direction of a third person. Sometimes what's happened, suppose A is located in Kolkata, B is located in Delhi. A got an order from B of Delhi. When everything is ready, B instructed A, instead of sending these goods to me at Delhi, please send these goods to C of Maharashtra. Now, as per instruction of the B of Delhi, as per instruction of Mr. B, I am sending these goods to the person located in Maharashtra. Actually, the goods are moving from Kolkata to Maharashtra. But since it is as per instructions given by some other person, I am doing that thing. In that situation, it is treated as, it will be considered as I am selling these goods to Mr. B. That means the place of supply in this situation is between Kolkata and Delhi, and another supply has taken place between Delhi and Maharashtra. That means in this transaction, there are two supply. First, it is between A and B. That means it is an interstate sale, and again B and Maharashtra, that is B and C, that is again treated as interstate transaction. Even the movement is a single movement of goods are there, but in this transaction there are two transactions are involved. Generally, if you are using Amazon, etc., they are asking for bill to and ship to. What do you mean by bill to and ship to? They are asking for two address, billing address and shipping address. That means the billing address means the person for whom name we are supposed to bill that invoice, we are supposed to raise the invoice, and shipping address, that means where we are supposed to deliver that goods. There are two different address they are asking. That's the same concept is applicable here. Suppose in this situation, the address of third person on whose direction we are working shall be treated as place of supply. Done. Sometime where the supply does not involve any movement of goods. Suppose in that situation, if the movement of goods are not happened due to that supply, at the time of that transaction, location of the goods shall be considered as a place of supply. When the goods are assembled at somewhere else or installed at site, for example, suppose I am a person located in Kolkata, he is a person located in Bihar. He got some uh, contract for installing some lift, etc. at C, Jharkhand. He is contractor, I am supplier of lift, and he is the contractor. This lift would be installed in C, Jharkhand place. Due to contract between A and B, the goods have been moved to Jharkhand for installation at the place somewhere in Jharkhand. In this situation, even though the transaction is between A and B, but the goods are supposed to be installed at some place in Jharkhand, it is treated as the transaction between place of supply in this situation would be considered as Jharkhand. And accordingly, we are supposed to calculate our tax liability. Done. Where goods are supplied on board or on conveyance. In that situation, yesterday we discussed about this situation. In this situation, we will consider the place of supply from where that goods has been poured on the conveyance. Suppose the place of supply will be the location at which the goods are taken on board. That means it would be in our last previous example, it would be considered since goods has been taken on board on Calcutta on CCU, it will be considered accordingly. In any other situation, it will be calculated as per instruction given by the board. Any question, any query till now? Tejaswini ji, clear it is?
Yes, sir. Clear, sir.
Now comes to place of supply of services. In case of domestic transaction, the place of supply in case of services, it would be considered as location of the service recipient. If the address of service recipient is available in the record of the supplier. If it is not available in the record of the supplier, in that situation, it will be considered as location of service provided. If it is given to a registered person, then the place of registered person would be considered as a place of supply. That means in case of domestic transaction, in general, if it is provided to registered person, recipient is a registered person, we can use the word registered buyer for better understanding. In that situation, his place shall be considered as place of supply, where the buyer is unregistered buyer. In that situation, if his address is in record, his address is known to me, then his place, and no address in my record, then my place would be considered as place of supply. Done. Again, I am repeating, in case of domestic transaction of relating to supply of services, if I am providing services to a registered buyer, in general, the place of that registered buyer would be considered as place of supply. If I am providing services to unregistered buyer, in that situation, the place, if the address of that unregistered buyer is available in my record, then his place would be considered as place of supply. If his address is not available in my record, in that situation, my place would be considered as a place of supply. Is it clear? These are the general rules which are required to be followed in case while determining place of supply in case of supply of services. In case of immobile property, any services relating to immobile property would be considered. The place of supply in relate any services relating to immobile property shall be considered where that property is located or intended to be located. Suppose I am constructing a building, suppose in Delhi. I am located in Kolkata, got an agreement to construct a building in Delhi. Fine. I take a service of architect located in Kolkata. Even though we both are located in Kolkata, but since the building is located or to intended to be located in Delhi. Hence, this services is considered as the place of supply in this situation. Whatever the service is provided by this architect relating to this building shall be considered as place of supply for this way would be considered as Delhi. Even though he is located in Kolkata, still it would be considered as he is providing services to me in Delhi. That means it would be considered as interstate transaction. And accordingly, IGST would be applicable. Done. In relating to restaurant and catering services, personal grooming, fitness, beauty treatment, service, including cosmetic and plastic surgery, the place of supply shall be the location where that services are actually performed. Training and performance appraisal, in case training and performance appraisal type of services, the place of supply or service in relations to that services would be, if it is provided to a registered person, then the place of that registered person would be considered as a place of supply. And in other situation, if we should consider the location where that training and performance appraisal has been performed, that place would be considered as place of supply. Admission to cultural, artistic, sporting, scientific, educational, entertainment events or amusement park, where that park is located, would be considered as a place of supply. If service is provided by way of organization of a cultural, artistic, sporting event, here it is a direct uh, services to the person they are enjoying in the that park, and this is event management service, organization of that cultural, artistic, or sports part. If that person is a registered person, then it would be considered as his place of service would be considered as place of supply. If it is provided to an unregistered person, then where it is this organization has happened, where this program is supposed to be happened, should be considered as a place of supply. Transportation of goods, including by mail or courier, if it is provided to a registered person, the location of such person would be considered as place of supply. If it is given to unregistered person, in that situation, when we are handed over that our goods for transportation to the transporter, that place would be considered as place of supply. Passenger transport service, I am bypassing telecommunication service. If it is provided through a fixed telecommunication line, then where it is installed would be considered as a place of supply. Mobile connection, where if billing address is available, then it would be considered at that place. If billing address is not available, then the place of provider of the service would be considered as place of supply. In case of banking, same rule is applicable. In case of insurance, same rule is applicable. Now we are coming to input tax credit. Any idea about input tax credit? Any idea about input tax credit? What is the input tax credit? Anyone? GST is divided into two parts. Number one part is your liability. Another part is how to discharge that liability. In general, the GST is divided into two parts. First of all, supply. If I'm supplying certain goods or services for consideration, etc., then my liability would arise. My liability would arise. After arising that liability, I would require to discharge this liability. I'm supposed to discharge my liability. That means I'm supposed to pay that money to the government of India, to the government. How to discharge? There are two mechanisms. Number one is ITC. Another one is by making payment. Liability, by if I'm supplying certain thing, then my liability would be there. How to discharge that liability? That liability would be is required to be discharged by within certain period. How to discharge that liability? It may be through ITC, it may be through payment. Payment, that means I have sufficient money in my bank account, I will pay that money to the government. Fine, it is the simplest way. And another way is ITC, that is called input tax credit. How we get input tax credit? Suppose I am trading in goods X. I am a trader. I bought certain goods from Mr. X for rupees 1 lakh. I'm removing all these things. I bought goods worth rupees 1 lakh from Mr. X. At this, on these goods, say 10% GST is applicable. I know 10% is not the rate of GST, but for the sake of simplicity, I am considering 10%. On this goods, 10% GST is applicable. So he charged me 10,000 rupees on this, and total payment I am required to make to Mr. X worth rupees 1,10,000. In my books of accounts, what I will do, I will consider 1 lakh as a cost of goods, and this 10,000 I will consider as a prepaid tax, prepaid taxation, which in technical terminology, it would be considered as ITC. That means when I bought some article, when I bought some goods or services for the purpose of my business or profession, then whatever amount of tax I have paid to the vendor, that would be available as ITC for me, subject to certain terms and conditions. And, and I am selling these goods after adding my profit of rupees 40,000. Say, after adding 40,000, I am selling these goods to Mr. C for rupees 1,40,000. Again, 10% tax would be collected by me from Mr. C. Altogether, I will collect rupees 1,54,000 from Mr. C. Now, I'm supposed to pay this 14,000 to the government, to the government. This is my liability. I made this supply. On this supply, I have created my liability. That is 14,000 is my liability. And now I want to discharge this liability. That means I'm supposed to pay this money to the government. How to discharge that one? Number one, I will utilize the prepayment of tax that is known as ITC. I will discharge 10,000 out of this ITC, and remaining amount, that is 4,000, I am supposed to pay through my bank account, through in cash, I am supposed to pay to the government of India. Now we are focusing on this amount. How to avail, how to get ITC at the time of acquisition, what are the terms and conditions we are required to satisfy, on which purchase, on which acquisition, on which inward supply we are eligible for ITC or which are not eligible for ITC. We are supposed to examine, we are supposed to discuss all these things in current session. Is it clear?
Yes,
Is
sir.
it clear?
Yes, sir.
First part we discussed in yesterday session, that is supply part. Now we are discussing how to discharge that thing through ITC. What are the term and condition? And another part for the discharging of the liability is payment. And then we will discuss about return. First of all, keep in your mind that ITC, the benefit given by the government, is not your fundamental rights. It is subject to terms and condition, and you can't challenge the terms and condition levied by the government. Number one. Number two, you are supposed to follow the term and condition. It is not your fundamental rights. Whenever I bought some goods, I am eligible for ITC. That is a wrong concept. This is not your fundamental rights. It is the liberty provided by the law. So terms and condition would be applicable on you. Number two thing, keep in your mind, since it is not your fundamental right, you are supposed to claim it. If you forget to claim your benefit of ITC, then it may be lapse. That means, number one, keep in your mind regarding ITC, it is not your fundamental right. And you are supposed to claim it. That means no claim, no benefit. You are supposed to claim it for taking that advantages which are provided by the law. If you forgot to claim that ITC while discharging your liability, then government are saying, okay, thank you, you forget. Okay, I'm happy, I'm getting some more money from you in cash mode. Okay. Now, what are the terms and conditions? Number one, who is entitled to claim ITC? In short, input tax credit. In short, it is known as ITC. The full form of ITC is input tax credit. What is the who is entitled to claim ITC? Few conditions are required to be fulfilled. Number one, the person who is supposed to claim ITC should be a registered person. If you are not a registered person, you are not eligible to claim ITC. First of all, the first uppermost condition is that you are a registered person. If you are not a registered person, you are not supposed to claim ITC. Number one condition. Number two, ITC is available on acquisition or I can say that inward supply of goods or services. That means at the time of purchase of goods or services, you are eligible, whatever amount of tax you are paying, you can claim that as a ITC, provided you are a registered person and that goods or services against which you are supposed trying to claim ITC, that goods or services should be used or intended to be used in the course of furtherance of business. If those goods or services are used in your personal purpose, then even though you are a registered person, you cannot be claimed ITC on it. Is it clear? These are the fundamental conditions you are supposed to follow. Basic condition we are supposed to follow. First, number one condition, you should be a registered person. Number two, the goods or services which you are acquiring and against which you are claiming ITC, that goods or services should be used or intended to be used in the course of furtherance of your business. If you are acquiring any goods or services for your personal purpose, and even though you are a registered person, you are not eligible to claim ITC on that purchase. Is it clear? Is it clear? Number third
Yes, sir.
condition, that person are required to fulfill certain more condition, which we are supposed to discuss, and that ITC should be claimed. And where to claim, how to claim? It should be claimed in the manner which is prescribed under section 49. If these basic condition along with some more condition are satisfied, then only you are eligible for ITC. What are the basic condition? The basic condition is that you are a registered person. The goods or services or both which you have bought should be used or intended to be used in the course of furtherance of business. You are supposed to satisfy certain more conditions, and that ITC should be claimed. How to claim? The manner prescribed under section 49. If these conditions are fulfilled, then you can think about claiming ITC. Otherwise, forget about that. Suppose, suppose Sandeep is a registered person. He went for dinner with her girlfriend in Taj. Total bill is rupees say 10,000, and on this bill GST of 5% has been levied. Is it available as ITC to Mr. Sandeep? What is your take, Mr. Sandeep? Fine. Whether ITC would be available to Mr. Sandeep on this restaurant bill of rupees 10,000 on which he paid ITC of tax of rupees 500, whether he is eligible or not. Jami, Kavita, Tejaswini,
I think it is not available for him for ITC, sir, because he is not under the same business. It is not used for under his in the course of his business, no, sir.
okay.
It's
Now,
personal.
Ms. Tejaswini has raised a point that since he is not in the same business, hence ITC is not available to him. Now, my question is that, say, I am taking some another example. Mr. Sandeep is running a business. The turnover that business is say 50 crore. He is required to get his accounts audited. He is engaged in the business of say cloth. He hired me for account for audit purpose. He pay my bill is rupees 5 lakh plus GST of 90,000. On this, since whether he is eligible for this 90,000 as a ITC. Anyone? Dear students, same line of business is not the criteria. Same line of business is not the criteria. Since Sandeep is engaged in the business of cloth, he is paying a bill for audit services. He is not in the same line of business. Still, this 90,000 ITC can be claimed, subject to other conditions. Try to focus on basic condition. He is a registered person. Yes, Sandeep is a registered person. Goods or services which he has bought should be used in the business or profession. Audit is supposed to be done for the business, hence it is used in the business. It is not the direct uses. It may be indirect, it may be direct uses in the business, but it is not for personal purpose. Hence, and it should be claimed the prescribed condition are fulfilled. He is supposed to claim the ITC on this 90,000. However, it comes to this point, in case of this 500 tax payment ITC, Mr. Sandeep with his girlfriend visit to Taj and for a dinner cost rupees 10,000. On that GST of rupees 500 has been levied. Is it for business purpose? Is it for business purpose? No. The criteria number two are not satisfied. Hence, ITC of 500 is not available to Mr. Sandeep. Is it clear? Is it clear?
Yes, sir.
Sandeep, is it clear to you? Dubey ji? Now, how to claim ITC under GST? What are the other conditions which we are supposed to fulfill? Number one, before claiming, if we are claiming the ITC, we should possess a tax invoice or debit note or any tax paying documents issued by the supplier. If I do not have any documentary evidence whether I have paid the tax to the supplier, I cannot claim. This is the very basic, obviously or not. If I am claiming that I have paid 10,000 as a tax to Mr. X on acquisition of so and so goods, don't you think I should possess a documentary evidence? Yes or no? without possessing documentary evidence, shall I claim like this way? Are you agree with me or not? Anyone?
Yes, sir. Documentary
That
evidence is
means
necessary.
first, after satisfying basic condition, we should consider for documentary evidence. That means if I'm claiming particular tax payment as a ITC, considering I'm claiming a ITC, then I should have documentary evidence which is in the form of tax invoice or debit note issued by the supplier of that goods or services. Agree? One more thing. Suppose Sandeep appear in an exam, CMA exam, say CMA final exam. He got a mark sheet. On that mark sheet, it is reflected as pass. With his roll number, etc., is mentioned. With his name, it is mentioned that he is a pass. But when we type that number, when we go to the website of the ICMI and check that roll number and the web page of that ICMI, the same roll number is reflected as a fail. What you should consider, whether Sandeep is passing the examination or Sandeep is failed in the examination. What is your take? Sandeep ji, whether you are considered as a passed or whether you are considered as a failed. Mark sheet you possess, that shows, yes, I am a passed. But same roll number, when I am checking through the website of the ICMI, then it is reflecting Mr. Sandeep is failed in the examination. Then what is your result? Tejashwini, whether Mr.
Don't know,
Sandeep
sir.
is considered as pass or he is considered as a fail.
Don't know, sir.
Don't know.
Mhm.
Don't know. Sandeep, anyone else? How to tackle this type of disputes? Can I say that? Can I say that he is failed? He failed in the examination, but he forged that document, that mark sheet, and after forging in on mark sheet, pass what is reflected. What is your thought? Whether my thought process is correct or not? What is my
Possible.
presumption?
Possible.
Yes, it
Possible.
is possible. First
Yes, sir.
presumption is that only. Mark sheet is forged and the result appear on the website of the ICMI is the final. Yes or no? So
Yes.
in the first criteria, we mentioned that the assessee should possess tax invoice or debit note issued by the supplier. Suppose what happened? Mr. Sandeep engaged in the business of cement, acquire cement from ACC Limited. Acquire cement from ACC Limited. Only one invoice has been made. Date 4th April 2024. The amount of invoice was 1 lakh. Amount of GST say 10%, 10,000. Total 1,10,000. And there would be invoice number are there. Say 1234 invoice number were there. On the basis of this information, he claimed ITC of rupees 10,000. Whether he is eligible to claim that one or not. Anyone? He is eligible to claim that 10,000 as ITC against this invoice? Yes or no? Anyone? Try to make it interactive. Rajeshwini,
Yes, sir. He
he is
can claim.
eligible.
Yes.
Now the problem is that Mr. Sandeep comes to know that what is the format of invoice followed by ACC Limited. Now, with the help of computer and Photoshop, etc., he forced so many invoice, say invoice 5 for 2024, number 3423, worth rupees 90,000. He forced and prepared 10 number of invoice on the basis of the document, one document. Is it possible or not? Now the question is that Mr. Sandeep is a registered person. All documentary evidence suggests that he acquired cement from SEC Limited. Out of all those documents, one document is correct. All remaining documents are forged. Do you think government will allow ITC on these documents? Till now, whatever we learned, Sandeep is a registered person. Yes, Mr. Sandeep is a registered person. The goods or services bought by him should be used in business or profession. Yes, it is used in the business or profession. He should possess documentary evidence. Yes, he possesses documentary evidence. It may be fake. It may be fake, but on a prima facie, it look like it is a genuine document. To settle that thing, to settle all these issues, that forged document are comes into the play. To settle that thing, government introduced one more thing. One more criteria has been introduced. That means the supplier, who is the supplier? That ACC Limited, are required to inform the government that bill number 1, 2, 3, 4, these invoice are issued by them to respective persons. If that information are not matched with the claim of the Sandeep, then we will not allow you the ITC. In this situation, ACC will confirm this invoice. Fine. Whether ACC will confirm this invoice, no, ACC will never confirm this invoice, and accordingly, the restriction is that if these invoices are not confirmed from the issuer, that is the supplier, then Mr. Sandeep is not eligible to claim any ITC on that one. Is it clear? Is it clear? This step is to take care of the forged document or forgery into the system, to prevent forgery into the system. Clear?
Yes, sir.
Then question arise how ACC Limited will confirm all these document on the web page of the GST site. That should be made through GSTR1. That should be made through GSTR1. That means the supplier of the goods or services are required to furnish GSTR1. In that GSTR1, they are supposed to confirm invoice wise detail should be provided by them. If the name of the Sandeep appear in that list with the respective amount, with the respective invoice number, date, etc., then only Sandeep is eligible to claim ITC. Is it clear? Even though he possesses tax invoice, it may be forced, he possesses debit note, we will not give you ITC, the credit of tax paid by you. That is available only if your supplier confirm that thing through filing GSTR1 or any document which is equivalent to GSTR1. If in the GSTR1 or equivalent document, if your supplier fails to mention your name or the information regarding that document, that invoice, then Mr. Sandeep is not eligible to take ITC on those documents. Is it clear?
Yes, sir.
Is it clear? Now question arise again. Try to understand the practical scenario. Suppose suppose ACC Limited have following sales. Sale number one, invoice number one, rupees 1 lakh. GST is say 10,000 to Mr. Sandeep. Invoice number two, 50,000. 5,000 is the tax to Tejaswini. Invoice number three, 20,000. GST is 2,000 to someone unregistered person. Invoice number four, 50,000. Tax on it is 5,000 to again on Mr. Sandeep. And so on. The invoice system are this is the all these invoices are issued by ACC Limited in the month of April. Now what happened? How they will furnish GSTR1? They are supposed to report all this data in GSTR1. In GSTR1, the data is supposed to be divided into two parts: B2B transaction and B2C transaction. B2B transaction and B2C transaction. What do you mean by B2B transaction and B2C transaction? Anyone? What do you mean by B2B transaction and B2C transaction?
Business to business.
Business to
Registered to
business.
registered person
Business to business, and B2C means business to consumer.
only.
How could you identify whether it is a B2B transaction or B2C transaction? How could you identify whether this purchase is B2B transaction or this is a B2C transaction?
Businesses will be registered, sir.
Sorry, pardon.
GST number.
If on the invoice, it may be possible that suppose Mr. Sandeep visited ACC and placed an order. At the time of placing order, ACC will ask Mr. Sandeep, why you are buying that goods? If it is for your business or you are using for personal use, is it possible? Do you think the supplier will ask this type of question from to Mr. Sandeep? No. The answer is no. The only way to identify whether a particular supply is B2B supply or B2C supply is the tax invoice issued by the ACC Limited. The tax invoice issued by the ACC Limited, if this document contain GST number of both person, supplier as well as recipient, then it would be considered as B2B transaction. If does not contain the GST number, the registration number of the buyer, then it would be considered as B2C. Is it clear?
Yes, sir.
Is
Yes,
it
sir.
clear? Few more information I am putting. Mr. Sandeep is located in West Bengal. Tejaswini is located in Chennai, that is Tamil Nadu. Unregistered person, that person is located in Maharashtra. Sandeep is located in West Bengal. Few more transactions are there. Number 5, 10,000, 1,000 tax on it to unregistered person located in, say, West Bengal. Number 6, 6,000, tax amount is 600, unregistered person located in, again, West Bengal. Now, how to file GSTR1, how to what data we are supposed to capture in GSTR1. SEC Limited will fill this detail in GSTR1. GSTR1 basically is divided into two parts: B2B transaction and B2C transaction. ACC Limited will report each and every B2B transaction line by line. That means he will report invoice number 1 issued to Mr. Sandeep for rupees 1 lakh, and on that one we charge tax of rupees 10,000. Again, invoice number 2 issued to Tejaswini worth rupees 50,000. On that, tax would be 5,000. Now, this is unregistered. This is not B2B transaction. Again, this number 4, again to Sandeep. That means these data would be on line by line. It is not like to Sandeep, I sold goods worth rupees 1,50,000. It is not like that. Line by invoice wise information we are supposed to fill in case of B2B transaction. Is it clear? It is not like ACC will tell the system to Sandeep, during the month of April, I sold goods of rupees 1,50,000. On that, tax would be 15,000. No, this is not the way. In case of B2B transaction, ACC Limited will report invoice number 1 issued to Mr. Sandeep. Tax is 10,000, value is 1 lakh. Invoice number 2 issued to Tejaswani for 50,000, tax is 5,000. Invoice number 4 to Sandeep, 50,000, 5,000, and so on. Is it clear? In respect of B2C transaction, ACC will report, state-wise and rate-wise consolidate data. State-wise and rate-wise consolidate data. In our example, there are 3 B2C transactions. Invoice number 3, 5, and 6. Here, ACC will report number 1, B2C transaction, Maharashtra, without mentioning the name of the person, without mentioning invoice number, Maharashtra, 20,000, 2,000 is the tax amount. West Bengal, consolidate data, 16,000, tax amount 1,600, and so on. Is it clear? In case of B2C, consolidated data are supposed to be reported by the SEC Limited state-wise and rate-wise. In case of B2B transaction, each and every invoice are required to be reported as a separate line item. Clear to all? Is it clear
Yes,
to
sir.
all?
Yes, sir.
Suresh ji? Suresh? Sandeep? Siddharth? Okay. Now what happened? Once these are reported by the ACC Limited through GSTR1, by which date they are supposed to report this information to the GST portal? ACC Limited, the supplier are required to submit GSTR1 for the preceding month. That means for the month of April 2024, these information are required to be submitted in the GST portal by 11th of the next month. That means for the month of April, it should be reported by 11th May 24. For the month of May, ACC Limited would report this information in the GST portal by 11th of the June, and so on. In some, for some taxpayer, it is not, the periodicity is not monthly. In few cases it may be quarterly, but in general it is monthly information we are supposed to provide, along with some more information. This GSTR1 are supposed to be reported by SEC Limited to the GST system. Is it clear?
Yes,
Is
sir.
it clear? Now, now,
Yes, sir.
now, now think about this criteria. The detail of the invoice or debit note referred above. That means Sandeep is possesses certain information issued by SEC Limited. That is the criteria number A. Now think about AA. The detail of invoice or debit note referred or possessed by Sandeep should be furnished by the supplier in GSTR1. Now this second number criteria is fulfilled. That means to claim ITC, Sandeep is supposed to possess that document. That's fine. But few conditions are required to be fulfilled by the supplier of the goods or services. Sandeep is nothing to do with this criteria. But if ACC Limited fails to fulfill that condition, Mr. Sandeep is not eligible to claim credit for this one. That means the ITC of Mr. Sandeep depends on the fulfilling the condition by the ACC Limited. That is the supplier of that goods. Clear? Now, Mr. Think from Sandeep angle. How could Sandeep comes to know that this invoice has been reported by the ACC Limited so that I can claim ITC? ACC Limited are not reporting this information to Mr. Sandeep or not to Tejaswani. They are not personally involved in this transaction, this reporting. ACC Limited will report all these transactions at the GST portal. Now the question arises how Mr. Sandeep comes to know that ACC Limited has reported this and these invoices and fails to report these invoices, or how comes Tejaswini comes to know that ACC Limited has reported this document or this invoice, this heap, or there is some mistakes. After submission of GSTR1 by the supplier by 11th of the succeeding month, next month, by 14th of the month, by 14th of the month, by 14th of the month, a report called GSTR2B is prepared by the system automatically. GSTR 2B is required is prepared by the system automatically. This report would be available at the Sandeep and Tejaswani end. If Sandeep or Tejaswani is using GST portal through their credential, after 14th, they will find a report called GSTR 2B. In that GSTR 2B, the whatever transaction are reported by their respective supplier would be under this report, would be shown under this report. In case of Sandeep, GSTR 2B, ACC invoice number 1 lakh and 10,000 would be there. What is the another one? Invoice number 4, ACC whose GST number is this, invoice number 4, 50,000, tax on 5,000. At the end of Tejaswani, it would be ACC invoice number 2. What is the value? 50,000. GST would be 5,000. That means customized report for each and every buyer, it would be prepared on the basis of report provided by the supplier. If Sandeep is working along with ACC, they are also working with, say, Ambuja Cement. In that situation, Ambuja Cement is also supposed to file GSTR1, and then again Gujarat Ambuja Cement invoice number 3, 1 lakh, and so on. The report is prepared. On the basis of that report, Sandeep comes to know that ACC or Gujarat Ambuja or whoever his supplier has reported this invoice number along with this amount and tax amount into the GST portal. And accordingly, he is eligible to claim this 10,000, 5,000, and these amount as a ITC. Is it clear? Is it clear? What is
Yes,
the
sir.
mechanism? Try to understand the mechanism. If you are not able to understand the mechanism, then it is very difficult to understand various returns. Okay. Now we understand that number one, to claim ITC, the person should be a registered person. Goods or service or both acquired by him should be used in the business. Number three, he should satisfy certain prescribed condition, and that claim should be made by him in the prescribed manner. If he fails to claim that ITC, the ITC would not be available to him. What are the prescribed conditions? Number one, he should possess documentary evidence. We already discussed. Not only documentary evidence, his supplier should report that transaction through GSTR1 in the GST portal. How could he comes to know about this one? This would be through GSTR2B or GSTR2A. He should comes to know about this reported transaction. Unless and until, in short, can I say that unless and until the invoice are not appeared in GSTR2B for your unless and until the invoice is not appeared in this GSTR 2B report, you are not supposed to claim ITC. Yes or no?
Yes, sir.
In short, in short, unless and until the particular invoice is not appeared in GSTR 2B, you are not supposed to claim ITC on it. Done? Clear? And how the data would be reflecting GSTR to be, what is the flow of the data? I believe it is clear to all. Now, few more restrictions. Such goods or services are received by him. Before claiming ITC, the goods or services should be received. If these goods or services are not received by the Sandeep, then ITC is not available. For example, why if supplier supplied certain goods, definitely he should receive. Yes or no? Try to understand one more situation. ACC Limited, located in Maharashtra, supplied wide invoice number 10 worth rupees 1 lakh on it. GST is 10,000. This invoice has been made on 30th April 2024. Okay. And accordingly, ACC Limited, this is sold to Sandeep. Accordingly, ACC Limited reported this transaction in GSTR1 relating to the month of April 2024 by 11th May 2024. Agree or disagree? Agree or disagree?
Yes, sir. Agree.
Now, on the other hand, in the GSTR 2B of Mr. Sandeep, GSTR 2B of Sandeep, this transaction is reflected on or after 14th of the May 2024. But what happened? And accordingly, he is trying to claim ITC of rupees 10,000 for the month of April. During the month of April, his tax liability was 90,000, and he is trying to adjust this 10,000 in the month of out of this liability of 90,000. Dear student, to claim this ITC, the criteria is that the goods or services against which we are claiming ITC should be received by Mr. Sandeep. ACC Limited supplied these goods on 30th April 2024, but Sandeep has received that goods in his godown on say 3rd of the May 2024. It may happen or not. Due to transportation, some time lag in transportation, ACC supplied ACC issued invoice on 30th April. Transportation is started. Mr. Sandeep received that goods on 3rd May 2024. Yes or no? Is it possible or not?
Possible, sir.
It is possible. Definitely it is possible. The rule is that unless and until these goods are not received by Sandeep, Sandeep is not eligible to claim ITC. Since these goods are received in the drawdown of Sandeep in the month of May, he may claim ITC in the month of May, even though this transaction is reflected in the month of April in the GSTR 2B of the month of April, even though it is reflected in the month of April, but Sandeep is not entitled to claim credit of this 10,000 worth of rupee ITC. Why? Because it is not received by him. He will claim this ITC in the month of May, not in the month of April. Is it clear? Is it clear? That means there is some time gap in the claiming and in the reporting. Clear?
Yes, sir.
Now, he has received the goods or services or both. Be careful, even though that transaction is reflected in 2B of Mr. Sandeep in the month of April, he cannot claim ITC in the month of April. He is entitled to claim that ITC in the month of May, but he should not claim in the month of April. However, if sometime goods are received in installment, suppose Sandeep order Mr. X, please supply 1 lakh kg of this pen, the 1 lakh piece of this pen. He agreed that this will be supplied in 3 parts. In the month of April, we will supply 30,000. In the month of May, 30,000, and remaining 40,000 would be supplied in the month of June. In this situation, the ITC, in this situation, goods are received in installment. Goods against a contract is received in installment. Mr. Sandeep cannot claim ITC before entire lot has been received. That means he can claim ITC in the month of June for entire 1 lakh piece of pen. He cannot claim proportionate ITC in the month of April. He cannot claim proportionate ITC in the month of May and proportionate in the month of June. No. In this situation, even though goods are received by him, but since it is installment he received, unless and until the entire lot are received by him, he cannot claim ITC. Done? Clear? That means where the goods against an invoice are received in lot or installments, the registered person shall be entitled to take credit upon receipt of the last lot or installment. Done? No ITC on advance payment. Even though you made the advance payment, but still you are not eligible to claim ITC because the goods or services are not received mere on advance payment. Unless and until it is received by you, you cannot claim ITC. Furthermore, one more criteria is that if if you bought certain items, claim ITC on it, all requirements are fulfilled, but you fails to make the payment to your supplier within 180 days. If you fails to make the payment to your supplier within 180 days, then your ITC is required to be reversed. However, whenever you make the payment to your supplier, your ITC is again available to you. Bill to ship to we already discussed. Number next is the tax charged in respect of such supply has been actually paid to the government by the supplier, either in cash or through utilization of ITC. That means unless and until your supplier paid that money to the government, this is the one of the greatest gray area in the GST mechanism. Unless and until your supplier made the payment to the government of the tax, you are not entitled for ITC. Your supplier may discharge his liability even through cash or through utilization of ITC by whatever be mode. If these are not the tax liability is not discharged by your supplier, you are not eligible to claim ITC. Even all required conditions are fulfilled. Now, imagine a situation. Try to imagine a situation. Understand the situation. Mr. X supplying goods to Mr. Sandeep of rupees 1 lakh. On this 10,000 tax is there. Sandeep poses invoice, valid tax invoice, fine. Mr. X in his GSTR1 reported this transaction to the GST portal. On the basis of that GSTR1, in the report of GSTR2B of Mr. Sandeep, this transaction is reflecting. But one more condition imposed by the government is that unless and until Mr. X paid this money to the government, how to pay? Through cash or through ITC, by whatever mode. If this is not paid to the government, it is not discharged to the government, then even though this information is available in GSTR 2B, Sandeep pauses tax invoice. These goods are used in goods business or profession. Goods or services are received by Mr. Sandeep. We will not grant ITC of rupees 10,000 to Mr. Sandeep. Unless and until the money is received by the government, unless and until your supplier discharge his liability, Mr. Sandeep is not entitled to claim ITC on it. This is the big challenge. How to keep eye on this thing. How Mr. Sandeep comes to know that this amount has been discharged by Mr. X to the government of India. Because government is not supposed to tell you whether I received that money, but if they did not, after some time, they will start sending notices. But how could Sandeep comes to know about this one? It is a gray area. It is one of the greatest gray area. In the GSTR1, Mr. X is supposed to report only liability. They are not supposed to discharge it. They are supposed to discharge through GSTR B, 3B. And the due date for that is the next month, 20th of the next month. Mr. X filed GSTR1 but did not furnish GSTR 3D. In this situation, Sandeep is required to keep the track record of Mr. X and try to avoid doing any type of transaction with person whose track record is very poor. This is one of the greatest challenge area in GST era. If GST ITC is denied and it is recovered from Sandeep, then it is very harsh on Mr. Sandeep. Clear? Is it done? Clear?
Yes, sir.
And Mr. Sandeep is supposed to furnish return under section 39, that is called GSTR 3B. That means that is the first return, that is the return where we are supposed to claim ITC. We already discussed, unless or until we claimed it, government will not allow ITC to us. This is the return where we are supposed to claim it. Unless and until we claimed ITC in GSTR 3B, government will not grant any ITC to us. Government will not allow any ITC to us. Is it clear? What happened if I am eligible for ITC in the month of May 2024, but I forgot to claim? Will government provide that one? No, government will not provide that one. But if you forgot to claim ITC in the month of May, you may claim that ITC up to next year's November. If you forget to claim the ITC in the relevant financial year, then you can claim ITC in form number GSTR 3B up to 30th November of the coming financial year. That means if any ITC is related to financial year 24-25, I forgot to claim in GSTR 3B. Okay, fine, no issue. Anyone can forget. Women are there. All women can commit this type of mistakes. In that situation, maximum to maximum, you can claim this ITC by 30th November 2025. That means coming years 30th November through GSTR 3B. You can claim this ITC by 30th November 2025. Is it clear? If someone asks what is the maximum time to claim ITC, what is the maximum date to claim ITC? That is 30th November 2000, 30th November of the coming financial year. Done? Done? Anyone have any question, any query?
Sir, one small doubt, sir. When GSTR 2B is produced by the GST portal every month, how is it tallied, sir? When I mean, if I have to claim it some part of the year, some later part of the year, how does the system tally whether my supplier has already paid or not?
Generally, in this situation, government is helping us. In GSTR 2A, 2B, there are GSTR 2A, each and every reported transaction will be there. In GSTR 2B, if government is thinking that the track record of this supplier is very bad, hence they will reflect that information in GSTR 2B, but with gray area. But that should not be properly reflected, and that will be mentioned that you cannot claim ITC for this supplier unless and until we grant permission to you. Through that only it is possible. Otherwise, it is very difficult to trace whether my supplier has paid the money to the government or not. It is not possible for me to track all these things. Be careful,
Okay.
students. GSTR to be prepared by the on the basis of data available in GSTR 1. GSTR 2B is prepared, automatically prepared by the system on the basis of data furnished in the GSTR 1. In the GSTR 1, there is no payment of taxation. Only we are disclosing, the supplier is disclosing his liability. They are not disclosing, they are not supposed to disclose how they are discharging it. That means the GST returns are divided into two parts, GSTR 1 and GSTR 3B. And the due date of these two forms are different due dates. GSTR 1, 11 month, by 11th of the next month, you are supposed to declare your liability. On the basis of your declaration, GSTR 2B is prepared. But if you are supposed to discharge your liability through GSTR 3B. Sometime what happened in earlier stages when GSTR 2B was not there, a big fraud was happened in the GST segment at the initial stage of the GST. What has happened? Some accommodation bills. Do you know accommodation bill?
No, sir.
Post document accommodation bill. There in practical language, they are termed as accommodation bill. That means some vendor issued an invoice in his vendor is registered, say 1 crore rupees, ITC 10 lakh to Mr. X. No stock has been transferred, no transaction has happened. Actually, this is a fake bill. This bill is issued to Mr. X. Say here Mr. A is there, and he issued this document. Mr. X paid against this invoice to Mr. X and through bank, and take in money back in the form of cash. Here the money is money laundering activities has been done. Don't you think Mr. X accommodate a invoice worth rupees 1 crore 10 lakh from Mr. A without any transaction, without any receipt of goods. This is entirely a fake bill is there. Mr. X paid money to Mr. A through his bank account, and against that payment from Mr. A, he take cash, that means Gandhiji. He take Gandhiji from Mr. A, and Mr. A paid that money to Mr. X, kick back that money to Mr. X after deducting certain percentage as his commission. Now what happened? Mr. X will claim that 1 crore is my business expenditure. By this way, he will reduce his income tax liability. By this way, he will reduce his income tax liability, and he will also claim he paid rupees 10 lakh as a GST to Mr. A, and so I'm entitled for ITC of rupees 10 lakh. Earlier rule was that Mr. A is supposed to report that transaction in GSTR1. Mr. X poses documentary evidence. Mr. A is a registered person. In GSTR1, Mr. A reported this transaction. But Mr. A did not furnish GSTR 3B. 1 month, 2 months, 6 months, 5 months, 10 months, 12 months, 14 months. He furnished GSTR 1, but he did not furnish GSTR 3B. And one fine day, he वो गायब हो गया. Mr. A went away. Search Mr. A. After searching Mr. A, he is government is not able to find out where is Mr. A. Now Mr. X Now, Mr. X, think about Mr. X. He is a beneficial position. He claimed 1 crore deduction in income tax and saved lot of money. He also saved through ITC. Through this mechanism, there is a big fraud happened in India. After detecting that fraud, government introduced that GSTR1, 3B, 2B. After detecting this type of fraud, government introduced this type of check. So government is very determined, since it is not your fundamental right. You are supposed to examine whether you are eligible for ITC or not. If you are not eligible, if we did not receive the money from your vendor, we will not give you ITC. Even though if this is a genuine purpose, suppose it is a genuine case, there is no cashback. Actual goods have been movement. Actual movement of goods have taken place. If Mr. X paid 1 crore to Mr. A, 10 lakh as tax to him, now think he furnished GSTR1 but did not furnish GSTR 3B. Who will be the loser if ITC will not be given to Mr. X? Mr. X is the loser. So government is saying that keep eye on your supplier. You are not supposed to keep eye on your vendor. That is your business interest. You are supposed to keep eye on your customer, whether your money is safe or not. Along with your customer, you are supposed to keep eye on your vendor also. If they did not pay money to us, we will not give you ITC of that money. If in this competitive market, 10% IT, say it is 10%, 10% is taken away from Mr. X. Think about his profit margin, where Mr. X will stand. In this competitive market, 10 lakh he paid to Mr. A. And again, since ITC would not be available, again he is required to pay 10 lakh to the government of India. Think about where he will stand in the profit terms. Do you think in this competitive market, we have sufficient percentage of profit to cover this type of losses? Keep eye on your vendor. Done? Any question? Any question till now? Sureji, I think you got your answer for what is the difference between 2A and 2B. And Tejashwini, any question, any doubt?
No, sir. No.
Now,
No, sir.
further, ITC, if in income tax you are claiming depreciation on any assets acquired by you on the GST component, then ITC is not available. If you are not claiming depreciation on GST component, then then ITC is available. That means you cannot get the both benefit. For example, suppose I bought a laptop for rupees 1 lakh, on which 18,000 GST is there, 18% GST, total comes to 1 lakh 18,000. In income tax, there are two ways. I can claim depreciation on 1 lakh 18,000. If this is the case, I am not eligible to claim ITC of 18,000. If I'm claiming depreciation on 1 lakh, then I can claim 18,000 ITC. That means I cannot claim both depreciation as well as ITC in GST. It is not possible. You can claim depreciation on principal amount and you can claim ITC on the GST component. On the other hand, on the contrary, you may claim depreciation on entire 1 lakh 18,000. In that situation, you cannot claim ITC of 18,000. Done? Maximum time limit for availing ITC, we already discussed. That is the 30th November. Ideally, it is 30th November, the following, the end of the financial year to which this invoice or debit not pertain, or actual date of furnishing the relevant annual return. Annual return we will discuss in our last session relating to GST. That is the one of the return we are supposed to file annually, GSTR 9. Before furnishing this date or 30th November, whichever is earlier, we can claim our ITC. If suppose my ITC for the month of April, my ITC is 50,000 and my tax liability is 40,000. I will knock off this 40,000 with my ITC. What happened to this 10,000 extra excess ITC? What will be the future of this extra 10,000 ITC? It would be carry forward to the next period. On the contrary, if situation is reversed, ITC is 40,000 and tax liability is 50,000. In that situation, I am required to pay 10,000 in cash to the government for the month of April. Done? I'm required to pay that money in cash. Now, negative list. Few more points are there. No interest on ITC carry forward by you. Government will not pay any interest to you. Input tax credit is allowed on capital goods also. Capital goods, if they are used in your business or profession, in your business or furtherance of business, ITC would be available on capital goods also. In any circumstances, ITC would not be available on goods or services used for personal use. In that situation, you are the ultimate consumer. The concept of indirect tax is that the ultimate burden of indirect tax should be borne by the ultimate consumer. In that situation, you are the ultimate consumer. You cannot pass on, you cannot take the credit if you are buying the goods or services for your personal use. Done? Done? Now comes
Yes,
to
sir.
negative list of input tax credit. We, in other terms, it may also use, we can also term this one as a block credit. This is also referred as a block credit, where in respect of these transactions, ITC is blocked. In any circumstances, we will not grant ITC if the transaction is relating to this covered in this negative list, covered under section 75. Even though all required conditions are fulfilled, if transactions are relating to this listed item, then ITC will not be available to you. Clear? What are the theme? Is it clear to you? Now, item number 1 in the negative list. Motor vehicle for transportation of person having approved sitting capacity of not more than 13%, including driver, except when they are used for making the following taxable supply. Further supply of such motor vehicle, that means you are selling motor vehicle, you are dealing in the motor vehicles, or transportation of passengers, or you are engaged in the business of imparting training on driving such motor vehicle. In if that motor vehicle is used by purchased by any person who are using this motor vehicle for this purpose, then ITC is available. Otherwise, if you are buying any motor vehicle, ITC is not available to you. That means if a company buy a motor car for his directors, ITC is not available to the company. If a company acquire a Mercedes for his director, ITC is not available on that motor car to the company. However, if I am a dealer of Maruti Suzuki, I bought goods from Maruti, I bought car from Maruti, and selling in the to the customer, I am eligible for ITC because I am engaged in the business of motor vehicle. If I am engaged in the business of transportation of passengers, suppose I am a travel agent and I am using that motor vehicle for that purpose, ITC is available. That means, in nutshell, we can say that if motor car is used directly in my business, ITC is available. Indirect uses, uh, apart from these three business uses, if motor car is acquired, ITC is not available to me. Done? Clear? Number two, vessel and aircraft, except when they are used. Again, one point here you should keep in mind: transportation of person, transportation of goods are not covered. If I bought a motor vehicle for transportation of goods, ITC is available. That means I bought a truck, ITC would be available if other conditions are fulfilled. Vessels and aircraft, again, same concept. Further, if ITC would be not be available, however, ITC is available if that vessel or aircraft is used in making the following taxable supply: further supply of such vessels or aircraft, transportation of passengers, or imparting training on navigating such vessels, or imparting training on flying such aircraft of use for transportation of goods. If for this purpose vessel or aircraft are used, then ITC is available. Otherwise, it is not available. Next point is that service of general insurance, servicing, repair and maintenance relating to those motor car or vessels or aircraft against which ITC is not available, then ITC on these services are also not available. That means if a company acquire a car for his director, no ITC is available. If that car is on that car, insurance is required to be done, and the company bought an insurance for that motor car, ITC is not available. Service charge, ITC is not available. Repair and maintenance, ITC is not available. However, if that motor car is used for that company for imparting training on driving such motor vehicle, then ITC is available at the time of acquisition of that motor car, as well as ITC is available for the insurance, for servicing or repair and maintenance. That means related expenditure, ITC would be also available. That means if ITC is available at the time of motor car, relating expenditure, ITC would be available. If ITC is not available at the time of acquisition of that motor car, for that motor car, ITC on related expenditure would not be available to you. Further, food and beverages, outdoor catering, food and beverages, outdoor catering, beauty treatment, health service, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicle, vessels or aircraft, except when used for the purpose specified therein, life insurance and health insurance. If you are availing these services, ITC is not available to you. Food and beverages, you are the ultimate consumer. Outdoor catering, beauty treatment. It is not like that you are bypassing this beauty treatment. Miss Lily went to beauty parlor for makeup treatment, and obviously it is her personal use. We cannot say that she will transfer that beauty treatment to some other girl. It is not possible. So this is personalized services. ITC is not available on it. Membership of a club, health and fitness center, ITC is not available. Travel benefits extended to employee on a vacation, such as leave or home travel concession, ITC is not available. However, if any of these are as per legal requirement, your employer is supposed to provide these services to his employee, then ITC is available. If as per law, any of the legal obligation, the employer is supposed to provide membership in a club to their employee, then ITC is available. If it is not required as per law, then whatever we expenditure you incurred in this aspect, in this region, for this purpose, ITC is not available. What's contract service when supplied for construction of an immobile property? ITC is not available. However, if that construction has been made for plant and machinery as a foundation, ITC is available. That means in general, for civil services, for civil work, ITC is not available. However, if that civil work is required for as a foundation for a particular plant and machinery, then ITC would be available. Goods or services are both received by a taxable person for construction of an immobile property. ITC is not available. Composition levy, we will discuss afterward. If you are covered under composition levy, ITC is not available to you. What is composition levy? We will discuss afterward. Goods or services both received by a non-resident taxable person, except on goods imported by him, ITC is not available. If certain goods you acquire certain goods for distributing as a corporate social responsibilities of a company, ITC is not available. Goods or services are both used for personal consumption, ITC is not available. Goods lost, stolen, destroyed, written off, disposed of by way of gift or free sample, ITC is not available. Be careful. If a company bought certain corporate gift item to distribute among their vendor or customers, ITC is not available on those items. Any tax which is paid by you due to evasion of tax, ITC is not available. In those scenario, if even though you are paying tax to your vendor or you are paying tax in any way, ITC is not available to you. Even though it is for your business purpose, even though you are a registered person, even though the ITC, the tax paid by you is reflected in your GSTR 3B in, but we will not provide you input tax credit. Is it clear? Is it clear to all?
Yes, sir. Yes, sir.
Yes, sir. Sir, one small thing. Is it possible for you to share this material, sir? All this has not been mentioned in the material provided to us. Only 4 points are there, and you have said about 10 points now. The
Okay,
negative
okay,
list.
okay. The institute is supposed to going to print. If institute will permit, I will share that. Okay.
Right, sir.
So where is the block credit? Uh, Number one, motor vehicle. If it is used for supplying motor vehicle, transportation of passenger, or imparting training on driving such motor vehicle. Apart from that, if motor car is used for some any other purpose, ITC is not available on you, not available to you. Similarly, vessels and aircraft and any services relating to that motor car, vessels or aircraft is not available. ITC is not available. Then food and beverages, outdoor catering, beauty treatment. That don't you think all these are personalized services? If ITC is not available on these type of services, membership of a club, health and fitness center, travel benefit to extended to employee on vacation, ITC is not available. However, if the employer is legally bound to provide these services mentioned in clause number B, that means this one, That means food, beverage, outdoor catering, etc., etc. If employer is legally bound to provide these facilities to his employee, then ITC is available to the employer. Otherwise, ITC is not available. It is not like that the contract between employer and employee suggests that this facility should be provided. No, it is not legal obligation. It is your contractual obligation. Legal obligation like Factory Act. If as per Factories Act, you are supposed to provide this facility to your employees, then I have legal obligation to provide that facility. If I have a service employment contract with Mr. X, and as per contract, I am supposed to provide a motor car to him. This is not my legal obligation. Be careful, students. It is my contractual obligation. It is not my legal obligation. Done. What's contract? That means civil service, civil work. ITC is not available unless and until that civil work is utilized for plant and machinery. Composition levy we will discuss afterward. If you are a taxable person covered under composition levy, ITC is not available to you. If I am a non-resident taxable person, ITC is not available to me unless and until it is related to goods imported by me. That means for the goods imported by me, ITC is available to non-resident taxable person. Apart from that goods, no ITC will be available to non-resident taxable person. Next one, if a company acquired certain goods or services for the purpose of discharging their corporate social responsibility, ITC is not available because corporate social responsibility is considered as a post-profit, that means PL appropriation item. It is considered as personal use by the company. Goods or services which are used for personal consumption, ITC is not available. Any goods which lost, stolen, destroyed, written off, disposed of by way of gift or free sample, ITC is not available on those goods. That's why try to understand one more thing here. Practically, suppose I bought goods from A of Delhi. Mr. A on 29th January 2024 raised an invoice 1 lakh. I'm making it 9th January 2024. 1 lakh on this tax is 10,000. Goods started their journey from Delhi to Kolkata. During this journey, this truck got some accident, and due to that accident, entire goods are destroyed. Am I eligible to claim ITC? There is no fraud. That is documentary evidence. Police case is there. The truck got accident, and in the course of in that accident, entire goods were destroyed. Am I eligible to claim ITC? I lost entire goods of rupees 1 lakh. Moreover, I am not eligible to claim ITC. But A of Delhi is supposed to pay tax on it, 10,000. He is supposed to pay tax to the government, but I am not supposed to claim tax on it. He will recover this money from me. But as per contract, as per our contract, if it is CIF contract, then it is otherwise. Else, I am supposed to pay 10,000 to Mr. A as a tax, but I am not entitled to claim ITC. Why? Number one, since that goods has not received by me. We already discussed to claim ITC, the goods should be received by me. Since it is not received by me, ITC is not available. Moreover, these goods has been lost, stolen, destroyed. There is a block credit in section 17.5. It is clearly mentioned that if goods are lost, stolen, destroyed, written off, or disposed of by way of gift or free sample, ITC is not available to me. Many company acquires distribute their goods as a free sample to their vendor or their customers. They are not supposed to claim ITC on that part. Here, Now, any question from this session?
No, sir.
Kavita? Now, anyone give a list the condition to claim ITC? What are the basic condition to claim ITC? Anyone? Licton, please suggest. Mr. Licton. Suresh, what are the basic condition to claim ITC? Tejaswini,
Sir, he should be a registered person, sir, first of all. Registered.
okay, sure.
Here. And the goods should be intended to be used in business, sir. The goods or services, furtherance of business.
Done. Few prescribed conditions are required to be fulfilled and that should be claimed. And that should be claimed. What are the prescribed conditions? What are the more conditions for claiming ITC? Reena,
He should have documentary evidence that he has paid the.
he should possess tax invoice or debit note issued by the supplier. And then
And that should be confirmed by the supplier, sir, through GSTR1.
to GSTR1, it should be reported by the supplier. Done.
He should receive
Any
the
other
goods.
one? The goods or services should be received by the buyers. Then only ITC is available. Anyone else? Next point. No one. Suresh. Only one person is answering the question. Don't you think this is try to make this session interactive? Okay, Tejaswini, continue. The next.
And supplier should actually pay the tax amount, sir. Only then he can claim the. We can claim the ITC.
By way of ITC or by cash payment?
Anyway, sir. Anyway,
And then?
possible.
And next one. It should be claimed by the SSC, by the taxpayer through GSTR 3B. If someone asks what is the maximum time limit to claim ITC, if I forget to claim ITC, then
the maximum time is November of next financial year.
30th November of the next financial year, or before filing annual return of the relevant previous year, whichever is earlier. In general, the GSTR 9 is supposed to be filed by 31st of the December of the forthcoming year. Hence, ideally, 30th November is the due date for filing for claiming ITC. Okay. And what are the block credit? Mention any 5 items where block credit, that means ITC is not available.
Personal items like food and beverages supply, cosmetic treatments, and health services, sir.
Okay. Goods acquired for CSR purpose. Goods which are stolen, destroyed, or distributed as a free or gifts. And goods used for personal consumption. Some motor vehicles, barring few motor vehicles, GST is not available. Yes or no?
Yes,
Do
sir.
anyone have any question, any query? Please raise. I hope there is no question, no query. Good. Today we will this tomorrow we will discuss how to utilize, what are the order of utilization, what are the rules and regulation for utilization of ITC in our next session, followed by GSTR return, etc. Since there is no question, no query from your side, shall I conclude the session? Tomorrow we will meet again at same time.
Right, sir.
Thank you. If you enjoyed the session, please post your message in the chat box. If you enjoyed the session, if you like the session, if you learn something, then please post your thought in the chat box.
Thank you, sir.